Let me ask you this. If the government offered to put $1,000 in your kid's account in the day they was born, would you take it? Of course you would. That's free money, right? And now, because of the big beautiful tax bill that was signed in July 2025, that's exactly what's happening. They create something new called Trump's accounts. And if you are a parent, grandparents, or even just planning for a future family, this could be one of the biggest money hack that you will ever get handed. So let's break it down together. No jargon, no government speak. Just this actually what this means for you, your family, and your money. Why you should care? Here's the deal. Every child born starting on January 1st, 2025 through the end of 2028 get a $1,000 bonus from the government. So that's automatic. You don't have to earn it. You don't have to apply for a scholarship. The government literally put $1,000 into this Trump account when your baby is born or adopted. Then starting July 4, 2026, you can put in your own money up to $5,000 a year into the same account for your kid. That money grows tax-free. Tax-free means you never owe the IRS a cut of the profit. If your account double, all that growth is yours. And here's the kicker. When your child turns 18, the account doesn't disappear. It rolls over into a retirement account like a Roth IRA. So that means your kid could start their adult life already set up for retirement savings. Now, why does this matter? Because most people don't start saving for retirement until they are in their, like say, 30s or 40s. Imagining your child starting at 18, you are giving them a 20-year head start. That's how wealth is built, not by chasing the next hot stock or crypto, but by using time that compounding. Who this is for and why you should be paying attention, right? So parents of baby born between 2025 and 2028. The grandparents who want to leave something meaningful behind, your legacy. And the guardians, this is for minors, not just traditional families. If that you, this is not just interesting new, this is one a lifetime generation wealth building opportunity. More like a saving habit, right? With the beautiful time compounding interest and gains, right? So how much could this grow? Let's do some simple math. Say you put in $3,000 a year for 18 years, that with normal investment growth, think like a balanced stock market return of around 6%, you are looking at about $100K by the time your kid is 18. If you max it out and do the full $5K every year, so that's closer to $115K plus. So here's the real power move. If your child doesn't touch that money and just let it keep growing for retirement, so that six-figure balance can snowball into millions. By the time they're 60, it's all tax-free, right? That's the why. This is not about little deduction. This is about handing your child a real shot at financial freedom. The rules in plain English. Here are the key things that you need to know without all the fine prints. First, babies need to be born between 25 to 28 to get the $1,000 government bonus. Second, families can put in up to $5,000 a year starting July 4, 2026. Third, the money grows tax-free. Fourth, by the age of 18, the account becomes a retirement account for your kid. Fifth, this is not a pilot program. That means it's only run for 4 years unless Congress extends it. Let's translate what it means. If your kid is born in 2029, they are out of luck. So the clock is ticking. Let's talk some strategy for what you can do for 25 and 26. So 25 is more like a prep year, so you can't really contribute yet. but you can start saving cash on the side so you're ready to max out when the contribution open in 2026. If you are expecting a baby, get all your paperwork in order. You will need that birth certificate to get the government $1,000 deposit. Also, and this is the key, the big beautiful tax bill gave us new deductions on overtime and tip income for 2025 to 2028. That means you could take the money you save from those deductions and funnel it straight into your child's term account when it opens in 2026, so that stacking tax breaks on top of each other. In 2026, the accounts officially go live. That's when you want to jump in and you want to contribute early in the year so your money has more time to grow. So if grandparents want to help, they can use the annual gift tax exclusion that is $18,000 per person in 2025 and then probably higher in 2026 for inflation, and that fund the account without hitting estate taxes. So from 2027 and beyond, your job is to be consistent. So keep adding, keep letting it grow. Don't cash out early unless you absolutely have to. So the real wins is in the rollover to retirement. Here's some squeeze for every ounce of value. First, you want to front load if you can, meaning the sooner the money go in, the longer it have, and the longer with time that it can compound, so the more it's gonna grow. Second, you want to coordinate with other accounts, so don't dish your 529 plan for college or your own Roth IRA. The account can work together. Third, you want to use gift tax planning. So have the grandparents chip in if they can afford it. It's a tax smart way for them to pass on wealth. Another talk on estate planning. The chumps account are basically a tool to move money to the next generation tax-free, so use them. So it's similar to other retirement account that you can set up for your kids, right? But the government is trying to help us kind of start that habit and have that account so we can start saving early for our future generation. You also want to educate your kids, so don't just hand over the account. You want to teach them about compounding, teach them about investing and why it is powerful with time to let the money grow. You want to watch out for pitfall. So now I'm gonna be straight with you. This is not gonna be perfect. You cannot contribute until July 2026, so don't plan to fund it this year, but set the money aside now, so as soon as that opens, you can start contributing your money. So the rules are brand new, so you expect the IRS to issue more guidance. Also, banks and investment firms are going to fight for your chum account business. Some will have high fee that eat into your return, so watch out for that. And this program only covers 4 years of kids. If Congress doesn't extend it, it ends after 2028. So if you are family qualified, don't wait. Now, if you are still with me, here's what you should do. Hit that like button if this opened your eye. It helps push this information to more family who need it. And then drop a yes in the comment if you would open a chum account for your kid or grandkid, or no if you wouldn't. And I want to see where people land. And check out my pro deduction shop. I build easy spreadsheets to help parents and grandparents track contribution and see how much their chum account could grow. So link in the description. Look, this is one of the most family-friendly part of the 2025 Big Beautiful Tax Bill. You don't get many chances to take free money from the government and turn it into a tax-free grow machine. So this is your chance. If you are a parent, a grandparent, or a guardian, you should care. The window is short. It's not lasting forever unless Congress decides to extend it, right? But who knows? the benefits are massive. Not the $1,000 that they put in, right? But even just $1,000 and you don't contribute your money, think about it grow for the life of your kid. That's so many years, right? So you're gonna get that growth and that compounding because of time. We build wealth based on time, right? So set yourself up in 2025 and be ready to contribute in 2026, and don't let that slip by. I'm Mia. Thank you for hanging out with me today. Hit the subscribe button if you want more information, more breakdown on the big beautiful tax bill, and I will see you in the next video. Aloha.